So you're self-employed and you want a home loan. Well, today we're going to show you how you can be successful in getting that home. This is the most comprehensive guide to self-employed home loans in Australia. And the best part, we're going to show you the exact information and the tips that you need to get your home loan approved if you're your own boss. So Nathan, being self-employed can be awesome. You're your own boss, you make your own holidays and it can be fun, but the banks actually look at you much more harshly. Why is that?
That's right. They do look at self-employed far more harsher because there are, in their opinion, higher risks when you're self-employed, particularly with consistencies in income and ability to turn a profit. So generally the banks want to see 1 full year's tax returns to show the consistency of income coming through.
That's compared to if you're just a normal salaried worker where you just need the last 2 weeks or 2 months pay slips and you're off and running. So that's where it's worth being aware of what the bank's going to look for and what they're going to be happy to see and what they're not so happy to see. So a few common issues that you see all the time, Nathan, for self-employed home loans.
That's right. Typically we see clever accountants that completely reduce the taxable income so people don't pay any tax.
Unfortunately, you just can't have it both ways. So when the banks are looking at your application as self-employed, they'll use your taxable income to derive your income. So we usually see it and we'll tell people, either you can pay tax and get a home loan, or you can reduce your tax and you won't qualify for a home loan.
The other is that some banks look at the last 2 years' tax returns. So when they look at the last 2 years, if there's been a big difference between the two, the banks can adopt the law of the two returns, which means your borrowing power might be a lot lower than you'd like.
Now, the good news with this is that not all banks are the same. Nathan's right, some banks will use the law of 2 years. So you might have a huge growth in 1 year and it's slowed down the next, and they'll use the lower figure. Other banks will adopt the average, other banks will use 120%, there's different permutations. The fact is, if you're having troubles with getting your self-employed home loan approved, chat to a mortgage broker that understands these situations and how to navigate that situation. So Nathan, is a self-employed applicant just someone that's running a coffee shop, or what kind of stuff do you see?
It can be anyone that is earning income on their own ABN. So we see a lot of people that are doing Uber driving, Uber Eats, Foodora, Deliveroo. That is all classed as self-employed income.
Even Airbnb, interestingly, because unlike your day-to-day pay where you get pay slips and get paid from your employer, this gets directly paid to your tax return and then you need to make those payments yourself. So again, if you're a freelancer, like Nathan said, Airbnb, all that other stuff.
IT contractors, we see a lot of that.
Super common. It's more and more these days, a lot more people are considered self-employed to the banks, and you need to be aware of what they're looking for on your home loan application. Well, how do I get my application approved if I'm self-employed? What do you look for?
So the banks look for a number of different metrics. The first is how long has the ABN been registered for? Minimum is 12 months. Most banks want 24 months ABN registration.
So that's your Australian business number. In other words, they want to be able to see that you've been working for yourself or been self-employed for between 12 to 24 months minimum. Just again to show that consistency that they can rely on that income for your loan that's going to be over the next 25 to 30 years.
The second is they want to see 1 full year's tax return, minimum. So once again, depending on the bank, some banks want to see 2 years tax returns, but they definitely want to see 1 year's returns and see that you've been earning that income through your ABN. So sometimes you might have had an old job and an old role where you were earning an income, that would be excluded from any income on the tax return.
Well, and it can be the case, we see it a lot of times where people might be Uber driving and they might have only been doing it for 3 months or 6 months and think, well, I'm making an extra 20 grand side money on that, and I'm also earning $50,000. Why can't I use both? Unfortunately, like Nathan said, the banks want to see that for at least 12 months to prove that it's consistent and sustainable. So keep that in mind if you're trying to apply for a home loan. Nathan, what kind of stuff's a bit different for a self-employed applicant compared to someone that's salaried? So if I'm salaried and I work for the government, I get my weekly pay, you see the gross figure, then the tax comes off that and you're away. What do banks look for if you're self-employed?
The banks look at really the net profit, you could call it. So you've got your income, you've got your expenses, and then they'll utilize the net profit or the income on the tax return. Now, the good thing is we can add things back. Things like depreciation and interest on tax returns are able to be leveraged and utilized in an assessment. So the banks have some complicated formulas in the way they look at things, which are completely different to anyone that is employed as a permanent PAYG, full-time, casual, part-time position. So just remember that when doing your tax returns, and also try to be careful with the amount of expenses you're putting on your returns.
I think it comes back to you need to have a pretty frank conversation with your accountant early in the piece, or work with a mortgage broker that can help you with planning a bit of that. So often we'll see someone that comes to us who has a really clever accountant that's actually put all their living expenses in their tax return. They've put their car in there, they've put their home bill, their home internet bill, their mobile phone. And what that means is, although they made all this money in income, they've also put all these expenses in their tax return, which at the end of the day leaves no net profit. And that's what the banks are looking for. So again, make sure you work with your accountant or you talk to your mortgage broker to get an understanding of where you're gonna sit in terms of your figures, because it can really stop your home loan dream from coming true. What about low doc and no doc and all those doc loans that used to exist? Can you still do that? Can I sign a form and say, yep, I'm totally earning $10 million? Is that possible?
There's still lending options out there. They are rare, and typically they require more deposit, or you have higher fees and charges associated with it.
They get really expensive because, again, the bank has less information to go off. If you're doing what they call a full doc or a regular loan, you show the bank your last 2 years tax returns and you show that the income's fine, they'll give you the normal same rates, interest rates as you get if you're salaried. But if it's a low doc loan, there's more risk there because you're not telling the banks, they're not seeing your tax returns, you're just signing a piece of paper, or your accountant signs a declaration saying how much you're earning. So there's more risk, and that's why the banks can be a bit stricter in terms of how much deposit you need.
That's it, guys. Let us know what you think in the comments below. If you need any help, as always, feel free to contact us at huntergalloway.com.au.